Federal Employee Group Life Insurance, otherwise known as FEGLI, are a set of complex life insurance plans offered to employees while in service and in retirement. Understanding the options and making the right choices not only protects you and your family, but can also save you some money. This is the first of 3 episodes on FEGLI. In this episode, we will define the 3 types of life insurance, provide you an overview of FEGLI, and outline the choices or options that you will get with FEGLI. Hi, I'm Zubin Kapoor, and I'm a financial planner at Valor Wealth Partners. Financial planning for Feds is dedicated to educating federal employees on how to maximize value from their complex but often underutilized benefits. In this next episode, we will focus on early to mid-career employees and how they can think through the choices that are offered to them for life insurance. In the 3rd episode, we will target pre-retirees 5 to 7 years from retirement and that are planning to fill out their retirement paperwork. So let's get into the meat and potatoes. Why does one need life insurance? You need life insurance to protect from financial loss. Now, there are 3 types of life insurances. The first one is term, which is for a short period of time, it has a low price, and can cover for a specific financial loss. The second one is permanent. Like the name suggests, it's for a longer period of time, and it's a little bit more expensive. And then you have the group life insurance that requires no underwriting. As long as you're part of the group, in this case the federal government, you have coverage. Now let's get into the FEGLI overview. FEGLI takes the best of those 3 insurances that I just talked about and bundles it for you. Please realize that FEGLI has some amazing choices, and I can say this because we don't sell insurance, but we choose to educate federal employees on how to maximize their benefits. Now let's look at the nuts and bolts of FEGLI. You get 4 choices, basic, and options A, B, and C, which I'll get into detail in a little bit. Everyone is auto-enrolled in basic. The government pays 33% of the premium on basic. For the other options, you have 60 days to choose them. If for some reason you go past the 60 days, you should wait for open enrollment to see if you want to take on some of the options. Now let's look at the options and what kind of coverage do you get for each of your choices in FEGLI. The basic is your salary rounded up to the next 1,000 and add another 2,000. Option A is a flat 10,000. I'm not sure why they chose a flat 10,000, but it's a great benefit for your family. For option B, you take your salary and round it up to the nearest 1,000. And then you have the option of adding 1 to 5 multiples. So for example, if your salary was $100,000 a year and you pick the multiples of 3, you would be eligible for another $300,000 in coverage. Option C targets your spouse and your children. The base for your spouse is at $5,000, and for your child is $2,500, and you have the options of adding multiples between 1 and 5 to those as well. FEGLI is an important part of your total benefits, and it requires careful consideration. When you understand all the choices and the level of coverage that is provided, then it becomes easier for you to pick the options and the multiples that you need. And as you progress in your career, your needs will change, and hence it's a good idea to evaluate your FEGLI coverage on a yearly basis. In the next episode, we will see how early and mid-career employees can navigate the choices in front of them by examining their changing needs. Before we sign off, researching your options will help you make more informed decisions, and sometimes you need a little bit of help deciphering your choices. We want the best solutions for you and your family. Please get unbiased, conflict-free advice. Until the next time, goodbye.